Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is a cannabis business podcast. And here's 4 reasons why marijuana stocks could be on a high for 2019, according to Yahoo Finance. Number 1 is that legalization is taking place globally. Cannabis is getting official approval from many U.S. states for recreational use, in addition to medical use. Though pot remains entirely illegal at the federal level, Michigan approved a ballot measure during the midterm elections for recreational use of medical marijuana. Then you also have Missouri and Utah being approved for legalization of medical marijuana. The total number of U.S. states greenlighting medical pot is now 33. Meanwhile, Canada became the first major world economy and the second country after Uruguay to legalize recreational cannabis. Although the opening up of several medical marijuana markets on the international level is pending, like Mexico, things are looking up in Germany and United Kingdom. Number 2 is that growing potential of cannabis in the beverage industry. We've seen a ton of money come in there, and that is part of that whole legitimization and legalization. Per an article published on Bloomberg, the cannabis and alcohol industries are gradually becoming a one-stop destination for recreation. A former CEO of Molson Coors believes that cannabis companies can see a huge growth as alcohol after the ban ended. The growing acceptance has led many brewers to come up with cannabis-induced beverages and ink deals with pot companies. Number 3 is that 2018 was a big year for cannabis deals. So apart from the Consolidation brands in August, other major deals included Marlboro cigarette maker Altria Group. They announced a $1.8 billion investment in Canadian producer Cronos Group. Notably, Aurora made some other big acquisitions last year, including the purchase of a Saskatchewan-based Canamed Therapeutics in May and Ontario-based MedRelief in July. Moreover, there were deals like Afria's purchase of Nuvara in March and Canopy Growth's acquisition announcement of US-based Ebu Hemp. MedMen Enterprise lately agreed to buy medical cannabis company PharmaCann. And number 4, you have a bullish analyst take. Barclays is betting big on cannabis and revealed that they have a position in Tilray, as well as boosted its bet in Cronos, and they're eyeing investment in the beverage giant Consolidation brands. Pot stocks have created a little bit of a buzz this year, and this ETF that crossed the $1 billion mark is part of that reason. A lot of investors and speculators are putting their money into portfolios and indexes as sort of peace of mind rather than just investing on one possibly risky IPO. The ETFMG Alternative Harvest Index has climbed almost 38% this year. The massive strength came despite disappointing earnings from Aurora Cannabis and Afria. This is because investors are capitalizing on the huge potential of the entire global cannabis industry, and with stocks being beaten down, there's an acronym, buy the fucking dip, which means every time it dips, you buy in, BTFD. So cannabis has been in focus, and these funds are tracking this index called the Prime Alternative Harvest Index, designed to measure the performance of companies within the cannabis ecosystem, benefiting from the global medicinal and recreational cannabis legalization initiatives. The fund holds 37 securities in baskets, and Canadian firms make up for about 57% of the portfolio, while American firms comprise only 33%. The ETF has an asset under management of $756 million and trades in good volume of around 820,000 shares, which is important. The volume is everything. A pump and dump system, for example, we saw a couple of years ago. Medbox, MDBX was the ticker symbol. We saw it go from $20 to $200 as investors pumped it up and then dumped it. And if you look at the volume, you can tell that it was only a short amount of people playing. So when you look at price movements, you need to be careful to also look at the volume, because if there's no liquidity, if there's nobody buying, you can't sell, you can't get out. So liquidity is an issue if you're looking at speculative penny stocks. Per an analyst at Cowen, the U.S.'s legal cannabis industry is expected to reach $80 billion by sales in 2030, surpassing the carbonated soft drink market in 2017. An analyst at Haywood Securities foresees potential growth in cannabis stocks, with the U.S. cannabis market expected to be worth between $16 million and $21 billion by the year 2022. The cannabis industry is emerging and poised for rapid growth given its widespread legality. Though cannabis remains illegal at the federal level in the United States, 10 states and Washington, D.C. have legalized recreational cannabis, while 33 states have legalized medicinal cannabis. Recreational cannabis is expected to be legal soon for adults over the age of 21 in New York. According to ArcView Market Research, the U.S.'s legal cannabis market is projected to reach $11 billion in consumer spending this year and more than $23 billion by 2022. During times of economic correction, whether it's a recession, depression, or shit hits the fan, whatever the scenario is, sin stocks always tend to do better. Being tobacco, alcohol, now cannabis, we should be able to see an inverse relationship during a downturn. So you'll see Facebook, Amazon, Netflix, Google, and bank stocks dive, while you'll see cannabis stocks increase. Indications of that happening are now, where the venture capital bubble just burst. So apparently SoftBank's top 2 investors are complaining about overpayment for tech companies. That to me is a first indication where that's already starting to occur. Your PE ratios are too high. When you're out there looking for value and Amazon as a tech company is buying their stock back, they're not providing you any value. They have a failed phone. They have failed products for a TV. Their drone program hasn't taken off. So all of the investments that people are putting in haven't really come back in the form of products. Now, their services are phenomenal. They have government contracts, probably no bid contracts, and their revenue was solid, but they're not paying any taxes on $11 trillion in revenue. And they're not really reinvesting it into solid products that I can tell. And so when other investors start to realize that, they're going to have a shift when it doesn't go up for no reason. And right now, I'm telling you that stocks are going up for no reason. That's all going to change. You see the venture capital bubble bursting when people are complaining about the lack of value and too high of pricing. So the price to earn, the earnings are so bad, the price is so high, that has to come back down to reality. So be on the lookout. I think there's going to be a lot more speculation as people pull their money from housing, the bond market, the equity market, and put it into cannabis specific.
And with that, we're going to roll this one up. This is Talking Hedge. I'm Josh Kincaid, and I'm out.